Welcome to Dr. Fred Markets. This is not financial advice. Every day, the world of finance, crypto, and artificial intelligence moves fast, really fast, and staying informed is the only way to stay ahead. That's exactly what we do here, together. Let's get into today's video.
The real bond bull market is hiding under Elon's car. Signal 1. While everyone doomscrolls elections and World Cup drama, the boring U.S. corporate bond market just quietly rolled past $10 trillion outstanding. And in the last 12 months, investment-grade corporate bond ETFs sucked in more new money than SPY, QQ. Here's the mechanism in plain English. As EV penetration rises, electricity demand shifts from refineries and gas stations to the grid and chargers. Utilities and infrastructure players raise money via bond offerings and sometimes via listed infrastructure or utility stocks. Regulators grant them predictable returns, usually a set allowed return on equity and recovery of investment through tariffs. That stability reduces default risk on their bonds. Your upside as a bond investor isn't 20x, it's getting paid in a world where others are ruined by volatility. 3 concrete moves to research. Not financial advice, just truth. First, learn how to read what's inside a bond ETF. Look for funds tilted toward utilities, infrastructure, and investment-grade corporates instead of just government debt. You want the lenders to the grid and charging corridor, not just treasury paper. Second, map the EV infrastructure chain. Ignore the car bad.
Does what you just heard make you want to dig deeper? Good, because that curiosity is exactly what brought you here, and the second part is going to take it further. Let's go.
List transmission utilities, distribution utilities, charging network operators, grid equipment makers. Then ask, which of these issue public bonds or sit inside infrastructure-heavy bond funds or utility ETFs that also pay dividends? That's where the EV cash flows actually live. Third, respect the math. At 5 to 6% yields, a boring bond ladder backed by the EV grid can quietly outcompete chasing the next Tesla wannabe lottery ticket that goes down 80%. You trade fantasy upside for survival income in a sector governments already vowed to protect. This is not financial advice, but here's the truth. The EV revolution will keep minting losers on the equity side and a quiet army of winners on the bond side. Decide which side of that table you want to sit on. Summary. 1. EV stocks are the circus. EV bonds are the cash register. 2. Policy guarantees chargers get built. Bonds fund the build, not memes. 3. Real investors follow the debt, not the headlines. If you learned one new thing about how EVs really get financed, hit subscribe and come back tomorrow. We'll keep ripping the mask off the market. This is not financial advice. If you enjoyed this video, please subscribe.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about, a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.